All right, let's get right into it. A little while back, the US hit the economy with the biggest wave of tariffs we've seen since the 1930s. And, the predictions were pretty grim. Everyone was bracing for a major shock, a real economic crash. But it never happened. So, what's the deal? Did all the experts get it wrong? Or is there something much more complicated happening just beneath the surface? That's the puzzle we're going to piece together today.
And, I mean, these predictions weren't just quiet whispers. People were shouting them from the rooftops. This quote here really captures the vibe at the time. This feeling that we were watching a huge, damaging mistake unfold in real time. The world was holding its breath, waiting for the floor to drop out.
But here we are. The markets didn't implode. Businesses didn't start shutting down left and right. From the outside, it looked like the economy just kind of shrugged it off. And this is what makes the story so fascinating. The forecast was for a Category 5 hurricane, but it felt like we barely got a drizzle.
Which leads us to the big question on everyone's mind. Was all that panic for nothing? Were the economic models just totally off the mark? Well, the answer isn't a simple yes or no. The truth is way more interesting, and it unfolds in a few key parts. Okay, first things first. The tariffs that actually hit the economy were just a shadow of what was originally threatened. It turns out the policy's bark was way, way worse than its bite. This chart really says it all. See that huge bar on the left? That's the massive economic earthquake everyone was predicting based on the initial threats. But then look at the much smaller bar on the right. That represents the tariffs that were actually paid. It was still a hit, for sure, but it was nowhere near the catastrophe we were all told to expect.
So why the huge difference? Well, a few things happened. First, the market absolutely freaked out, which caused the administration to ease off the gas pedal. Then, special trade deals and exemptions were carved out. And of course, businesses got smart fast. They started rerouting their supply chains to get around the tariffs, and yeah, some just found ways to dodge them altogether. The takeaway? The tidal wave that was announced ended up being more like a ripple.
But even a ripple makes waves. That money was still being paid. So if it wasn't showing up as higher prices for you and me at the store, where did it go? This leads us to a sort of hidden shock absorber in the economy.
And this is the next piece of our puzzle. We all know that usually tariff costs get passed straight on to the consumer. That's just Econ 101. But this time, that didn't really happen, at least not right away. So who was stuck with the bill? And this chart gives us the pretty shocking answer. According to Goldman Sachs, look at that biggest slice. Over half of the tariff costs were just absorbed by U.S. businesses. They took the hit directly to their profit margins. This is the single biggest reason why most of us didn't immediately feel the pain in our wallets. American companies just ate the cost. Now, why on earth would they do that? Well, because the whole tariff policy was so messy and unpredictable. A lot of companies basically made a bet. They decided to just grit their teeth and swallow the cost, hoping it was just a temporary storm they could ride out, rather than jacking up prices and risk losing their customers. So if businesses are taking this hit to their profits, what's the ripple effect on the whole economy? This is where we start to see the real damage. It's not a big, spectacular crash. It's more like a slow puncture in a tire, a quiet, hidden drag on growth. Take a look at this number, 1.1%. That was the annual economic growth rate for the U.S. in the first half of the year. Now, just by itself, you might look at that and think, okay, so what? But when you add a little context, it gets pretty alarming. If you take the crazy, once-in-a-century disruption of the 2020 pandemic out of the equation, you have to go all the way back to 2012 to find a 6-month stretch of growth that week. So no, the economy didn't crash, but its engine was definitely sputtering. And this isn't just an abstract number. It has real-world consequences. This quote from the governor of Kentucky just makes it crystal clear. A massive construction project gets put on ice. Why? Because the tariffs made it impossible to budget. The cost could be $1 billion, or it could be $1.3 billion. You simply can't make huge long-term investments in that kind of chaos.
And that is the absolute key. The true cost isn't a recession showing up on the news this year. It's the compounding effect of thousands of delayed projects, of hesitant investments, of ideas that never got off the ground. It's the immense, invisible cost of growth that we'll just never get back.
This leads us to the final, and maybe the most troubling piece of the puzzle, the long-term political problem.
See, once tariffs like these are in place, they create a kind of trap that makes them incredibly difficult to get rid of.
This is basically how that trap snaps shut. It starts with a simple goal: protect a specific industry. But then, those now protected companies start spending big money on lobbyists to keep their special advantage. At the same time, the government gets used to all that new tariff money coming in. And before you know it, the whole thing becomes politically locked in. Trying to remove it would start a huge political war.
And the long-term danger here is really profound. While the rest of the world is getting more connected, lowering trade barriers, and becoming more efficient, this kind of policy means the U.S. risks doing the exact opposite, building a fortress around itself, becoming less competitive and more isolated as the years go by. So in the end, the cost of the tariffs wasn't a myth. It was just misunderstood. We were all looking for an earthquake, but the real damage was erosion, a slow, steady wearing away of growth, investment, and competitiveness. Which leaves us with a final thought to chew on. When you build walls to protect what's inside, are you building a fortress, or are you actually building a cage?